Now I want to start talking about the general taxonomy of crypto assets. And first we'll begin talking about cryptocurrencies. You may have heard that term before, and in fact it was widely used to describe anything in the blockchain space because Bitcoin is the original crypto asset and it's also a cryptocurrency. Now to be a currency, you have to fulfill a couple standards, and there are a few principles that currencies are all governed by. And the first one is that a cryptocurrency, or any currency, has to be a medium of exchange. It has to be something that you can transfer and someone is willing to give you a goods or service in exchange for it. So it has to be widely accepted. The next thing is that a cryptocurrency needs to be a unit of account. And that just means it has to be a standard unit of measure that other goods can be valued at. And lastly, a cryptocurrency needs to be a store of value. Now, when I say store of value, it doesn't necessarily mean that if you put your money into a cryptocurrency like Bitcoin or Litecoin, the value will increase. The value can go down. A store of value just means that your money or your value can be held in these cryptocurrencies or any currency in general for time, and then you can go back and retrieve that value even if it went higher or lower. For instance, in the gold markets, gold is considered a store of value, but it doesn't mean that gold's value always increases. There are times when there's a deflationary environment when the price of gold actually goes down. So that's something to keep in mind when they say store value. It doesn't necessarily mean the value will increase over time.